YouTube. Good morning, traders and investors. What a weekend we have had. Actually, what a Friday we have had with the markets down, majorly down. S&P down, NASDAQ down, Dow Jones down. Everything was down. And let's just take a look at futures. They're kind of showing that we're rebounding here. Maybe it's time to throw our bare heads into the water and just say that this was a technical pullback and it's over, or not. But let's just take a look at what happened last week, because today again we're going to go over, activate here our little flow. Today we're going to go over a couple of market movers, things that are moving the markets majorly this week. Also, Trump is going to come out with maybe some kind of cannabis announcement. We're also going to talk about that, but just briefly, today we're going to release a special video about cannabis stocks, top 5 cannabis stocks. Take a look at that one. Now, let's jump into the S&P 500, currently to the upside, with futures indicating here that the S&P will open on the green. So it hit that 21-day moving average and said, no, I do not accept defeat, and it bounced off of it. So again, we are green in the S&P 500 at least before markets, okay? Because everything that I'm talking about here is before market. That's why I'm calling this before the bell. So we can get straight before the bell information and how we can set up for some possibly good trades. NASDAQ also up with 140 points here, the NASDAQ. The Spider ETF for the Dow Jones also down a bit, so it's pulling back. It went up, but it's pulling back down again. Again, the Russell, major pullback. So that's why I don't trust the S&P and the NASDAQ. Everything is indicating that we're still going to go over a major pullback, especially the NASDAQ is kind of iffy. I could understand that the S&P, because we saw some market rotation here. So let's take a look at the heat map here. We saw a little bit of market rotation. This is the Friday close. Things started moving into financials and into consumer goods and healthcare and so forth and so on. I would expect that this rotation to keep on going at least this week. But to be wrong. Also, let's take a look at the VIX. You can see the VIX opening up negatively, which is good. Good spike up, which is bad. Also, the dollar giving us senses that it's going to become oversold. So it wants to get oversold down here at the 33 RSI, expecting the dollar to go down, get a bit oversold this week, and then go upwards. Oil, on the other hand, again, down. Still news about Venezuela pushing shares stabilizing ahead of big central bank decision. This was key data points, all inches higher, but Ukraine talks overspilling concerns, cap gains, market talk. And what do we have here? Stock slip ahead of central bank decision, key data. Okay, this is some old news. 15th of December. This is actually current news. Natural gas pulling back just a little bit here, although I saw that's interesting. In the pre-session, so before European markets opened, we saw oil and natural gas in green, the green zone. Gold in the green zone. Okay, but silver, let's just talk about silver here. Now, I replaced the Fibonacci extension to its previous lows, which was in April, its previous highs, all-time highs, which was in October. And now we are at over 61% Fibonacci extension. Normally, if this holds here, and I think it's going to hold, sadly, for me, because I'm betting against silver, this is going to go probably to 127. Now, this will not happen in the next couple of weeks or next couple of months, but I can see next year silver going or having a lot of probabilities. Oops, I forgot to turn on my other light here. Having the probability to, there I am. Now you can see me. Having the probability to go further up. The same thing for gold. Could get a new leg up higher. Let's just see how this. Well, so I have major shorts on silver. This could just devastate me. Hope this won't happen. Hope silver gets a little bit pulled back just for the next leg up. But if not, that's it. I'm going to leave my position here because this is hurting me massively. Okay, copper, exactly as predicted, going up, up, up with the AI trade. And Bitcoin. Bitcoin is showing here strength. Had a much higher open here. So on the weekend sessions, especially on Sunday, it was down. Then today, maybe it was just too much down. It's kind of having a rebound here. Man, I kind of don't expect none of this to go up this week. And I think this is the only reason that gold is going up, because everything else is going down. Just simple as that. Ethereum, on the other hand, beautiful breakout from its 21-day moving average. So this should go up here, hit its, what is this, the 50-day moving average, maybe hit its head on it, maybe stay around in that range a bit, and then just keep moving upwards. I can still see this. This is for me bullish, it's not bearish. I do see Ethereum, Bitcoin, gold, silver, everything heading into next year with pretty good returns on investment if you are invested in there. So currently on an RSI, 50, not overbought, not oversold, maybe in a perfect setup for an iron condor. Ooh, short iron condor, or even a strangle. Defined or undefined risk, that's up to you. But always take into consideration the volatility. Okay, let's move on now to a couple of trade ideas, because we have a couple of companies here that are setting themselves perfectly up for some beautiful trades. First of all, Netflix. Netflix, now you know the story, Paramount, Netflix, Warner Brothers. Everybody wants Warner Brothers. Only one of them can get them. So the idea was Paramount bid for Warner Brothers, then Netflix bid for Warner Brothers, then Paramount wanted to do a hostile takeover, then nothing. So Move is at Netflix. So this is the only thing that's kind of concerning for me, and kind of 5 year here, so I can have access to it. Kind of the only thing that prevents me to add currently more shares to Netflix. So here we have, just do a Fibonacci retracement. Where are you, Fibonacci? Retracement. So we're going to go through lows to highs. This was the extension. We are currently sitting in iffy positions. So because it's already at a over 60% retracement, 70 range, we could see a 100% retracement. This could also mean that it could go lower in its 161%. Why? Because we have a lot of support in this zone. Now, everything that I'm talking about here is depending on how high they're going to furthermore bid for Paramount. If they're going to come out today and say, that's it, we're out, then, yeah, they have a clause in there. That's why I'm not expecting that they're going to pull back from this. The problem now is that the Netflix and Paramount, as they had their agreement, both of them owe each other money if they do not come to an agreement. Now, who owes who money depends on who pulls back. If Netflix now pulls back, owes Paramount money, which is not good for Netflix and is going to go down. If Netflix bids higher than, Warner Bros. The bid for Warner. If Netflix bids higher than Paramount has had his bid for Warner Bros. So Netflix, Warner Bros., Paramount, Warner Bros. If Netflix now bids higher than Paramount bid on Warner Brothers, then the price will go down. So two possibilities for the price to go down. The only possibility for the price to go up is that Warner Bros. Accepts the bid, and then Warner Bros. Owes Netflix money. One. Second, concerns about Netflix owning. The problem with Warner Bros. Is this going to become the union thingy and they can't decide on their own pricing, and that's why the stock is down. So from that point on, the stock will explode. Until that point is reached, we can see Netflix have even more pullback right here. Okay, so that is the problem. Now, if you want to add a naked put down here at 80s, I don't know, man. Kind of dangerous. The only reasonable would be the 70 and 60s, because that is a huge retracement for Netflix. It's kind of a no-brainer then. Even if they buy Warner Bros., they are going to make money somewhere in the future. So let's go to trades. So for the 32, I have here a call against my. Actually, this is why I'm doing this. Bought a call and I'm selling calls against that call. Simple as that. If Warner Bros. Goes up, I win. If Warner Bros. Goes down, I win. Now, if it goes down a lot, I kind of lose. But until that day comes, I'm still going to win here. Okay, long as they go down, but not that much, and then come back up again. That's pretty much it for how this would work. If you want to sell a naked put, let's go to 30 days out. And I said around the 80s zone. So it's you should go outside of one standard deviation. You need 800 something. And that's not even bad. You could get 9%-ish on this investment. Naked put. Wanted to own Netflix at that price? I would say yes. But the 80 zone is where I would go. So you could go outside 67 days. That's probably everything is solved. One standard deviation, I would go to the 80s. Either I'm going to own Netflix at 80 or I'm going to get $152 in, well, 2 months. That's a bit too much. I would rather get $300, but it's over 10%. It's almost 20%. Okay, the return here on the buying power that you're giving up, it's over 20% return. Let's just say that's a lot. That's a lot. Over 20% in 2 months, that's 10% a month. It's okay. I like 10% a month. I really like it. Okay, now moving on for next. So this is one play. Moving on, well, we have NVIDIA. Let's go to NVIDIA right now. NVIDIA is interesting. Forget the 200-day moving average. If you want to target this, let's just go to the 32 days out. I'm doing the same thing here. Sold the call, bought a call, sold calls against it. A 200-day was sitting here at 163. At 163, it's right here after the expected move. So the expected move is 160, actually it's 159-ish. And you would get some juicy premium here. Let's take a look at this. Delicious. Selling a naked put here, not that bad of an idea. Owning NVIDIA at $158 a share, not that bad, but it's kind of dangerous. Okay, so I would go out to even 2 months, let the year go over, and you can put this on and take it off at 50%. So check this one out, $261 in 3 months, in 2 months, sorry about that, putting up $2,900. I would say not that bad. Not that bad at all. Now, this is not a good setup. We are only at 11.6 IV rank. At this low IV, you should actually be buying. You should actually do a leaps. Okay, buying shares way out in the future, selling calls against it. This is not that good of an environment to sell premium. Just note that 11.6 RSI IV rank. Not RSI, IV rank 11.6. On Netflix, it was 30. A good IV. Even a good IV for a strangle. Maybe not. Maybe an iron condor. But the volatility crush will help. here, volatility could spike and it would devastate you. You need the buying power. You couldn't. It's always risky. Remember, you should always have that buying power. Never invest more than 50% of your buying power. Never put him up. Now, the next one, sorry, lost my voice there, is Amazon. So let's move to AMN. Although I have it in my watch list, I didn't want to trigger. Amazon, currently not oversold, kind of sitting right there where it doesn't know what to do. I'm expecting it to come down a bit, touch the end of the Bollinger Band, even go underneath of its 200-day moving average, currently sitting at 220, 290. I think that the Bollinger Band is over it. So at 290, let's just take a look at the monthlies. So 32 days out, January 16 expiration date, 210 is the expected move at 209 and 100. Wait, 209 I wanted to say. So 210, putting up 218 is what you would get at the mid-range. You would need to put up $2,800. Not that bad for a naked put. Looking good, but let's just do something different. Let's go out to 190. So I strangle here. And to skew to the upside a little bit. It's sitting in the middle. It's sitting in the middle, doesn't know what to do, kind of skew it to the more to the downside. So maybe do something like this. It's going to go down, but it has more leg to go up again. $113, putting up $2,200, $2,300, let's say. 92% pop, 92% of 50% prop. Pretty good, 113 extrinsic value. Not that bad. But even if you want to do here with the danger of owning the shares, 84% probability of a profit, 218. I think the better trade here is the naked put to the downside. IV12, again, pretty dangerous, but Amazon has already sold off so much. So getting, what is this, 8% in 1 month, not that bad of a trade. Not that bad of a trade if you have the buying power. Let's move on now to Uber, which I can't select. Okay, there we go. Let's go to Uber. So be very careful because this still could go down. I'm expecting Uber to go upwards. It's in a downtrend. So if you want to skew it, you want to put on an iron condor, or if you want to put on a strangle, I will skew to the downside a little bit more. It's going to go up or it's going to come down once again, I would say. It has a lot of resistance right now above its head. It has all of the moving averages above its head. And the 21 crossed the 50 and the 100-day moving average. If it crosses the 200-day moving average, we are in a pretty much downtrend for Uber then. But this doesn't mean that you can't sell a naked put down here at the 60. I just call it the 70. But for the 70, I wouldn't go too far out. So for the 70, I would maximally go out through January. Sorry, I had to sneeze. Hopefully I didn't kill the mic here. So I would go out January 70, only getting $20, putting up $700, $3. That's not that good of a trade. If you want to risk the 77, getting in 74, so $80, putting on 1,000. So again, you need that high IV, but I want to try a strangle here. That is not looking bad. If you want to try a strangle, it's skewed to the upside because I'm expecting this to go up in go to the charts again. This to go up again, hit its head, come back down again. A better bet would be to let this go up if it's going to go up. It has currently triggered a MACD sell signal. So let's try it a different way. Let's go to the 75, move it down a bit, and let's go up. Let's go with this also down a bit. So it's more dangerous, but I'm expecting this to move first of all down and then to move up. Just technical analysis here, okay? MACD sell signal triggered. We have confirmation where it was triggered exactly. Yeah, it was triggered. Let's let the market open. Let this confirm. Wait an hour. Let's see what it actually does. And this could be a really good setup for the for a strangle here. Skew to the downside. It could go down. It has more probability to go down, and then it could come up again. Okay. Not that delta neutral. So if you want to go delta almost neutral, you would need to go 13, and we need better. The market is not open, so these prices are not that good right now. Wait for the market to open, but you can see how I'm trying to put it, first of all, delta neutral, and also to have the best the best possibility for a pop. Because you should take this. You have 1 month, 32 days to expiration. If you get 50% because it goes down, take the profit and run. And that's it. Get $70, run in 10 days. That would be perfect if that happens. So let's go to the last one, which is SoFi. Let's talk about SoFi. SoFi has earnings coming up. So more than 32 day, I wouldn't go out. And here you can see that SoFi is setting itself up beautifully for a strangle. So if we have another green day here, if it hits that 27 mark, 27, 28 almost, then it sets up beautifully for a strangle. Sadly, volatility rank not that good, but I would still try a strangle right here. You would currently get, that's such a good strangle. So $94 and putting up $273. Perfect setup for a strangle, I would say. If this opens green, goes up a bit, put up the strangle, and have a stop loss at 3 times the expected, the max profit. So if this goes to 270, exactly as your buying power, then take it off, it's over. But if not, I think you're going to get a good, nice profit here. Okay, that's it for me for today. Check out my Cannabis video that is going to be released just in a couple of hours. Deep dive into Cannabis, because those stocks just popped like crazy. So, catch you next time. Stay safe out there.